All right, good evening. This is Bruce from Targeted Wealth Creation. Um, I put my final prediction out. Second one is we got real close to the distributions for the three funds of funds, right? YMAX, YMAG, and ULTI. They've all come out, and I wanted to do a payment review. Not so much on my predictions, that's not that important. It's more about what I think of the funds. Obviously, I'm going to review what they paid, how that stacks up, what the yield is. Some of you know some of that, but for my new subscribers and people interested in these funds, excuse me, I wanted to go over in more detail. So let's review what I talked about before in various segments, right? I came through and declared, just for everybody's information, so on 6/13 you had to buy, right? Now on 6/14, if you buy, you won't get paid until middle of next month, right? But people like that idea of buying on the day after because the dividend gets taken out. And then whatever happens in the trading affects it. Sometimes if the markets are up, it can make up half of that dividend payout in the pre-market. So people go, well, it didn't get subtracted. Yes, it does. When they go to open in the pre-market, they absolutely take out that dividend. Just no arguments there. And for all of you that owned it or bought it all the way up to 6/13, any of these three funds, YMAX, YMAG, or ULTI, you will receive your payment on Monday, 6/17. Rinse and repeat for the next coming months. So here's what the payouts with the summary. And I'll just show you, yeah, on YMAG, I was pretty far off on this one. It basically was 68 cents, and I had it at 74.5. And on YMAX, call it 72.717, and it paid 73 even. So very close on that one. And pretty close on ULTI. ULTI is the wild child. I'm going to go into some detail on that, and you guys can understand why it's the wild child. It's just different. It pays a heck of a yield. Look at that, 90%, right? So people get attracted to it, but just understand it's a wild child. Its NAV has gone down. All right, let's take a look at what I rolled up the summary for you. So on the left, I'll pull this out to December. They publish a year ahead, right, at the beginning of the year. So we had all this information. These funds only started. So YMAG, again, just for those of you, that's the Magnificent Seven. The Google, the NVIDIA, the Facebook, Meta, Amazon, Microsoft, right? Just going from memory. And then YMAX, as a reminder, is all of the funds that YIELDMAX has in their single fund category. There'd be no need to include ULTI or YMAG because YMAG is a subset. YMAX has every ingredient or every fund that YMAG has. So YMAX has them all except for ULTI and new ones like GDXY hasn't paid yet, but after it pays, it'll be in there. The only one that we think won't be there is Crash because it's a bear fund on Tesla, whereas Tesla is the bull Tesla. So right now they may end up as they put more bear funds in there like NVIDIA bear, Apple bear. The ticker symbols when they get there will be, I think, CHIP, CHPS for the bear on NVIDIA or NVIDIA, and then Rotten, ROTN for the Apple. So there'll be more bearish, and then maybe what they'll do, this seems to be the indication, is they'll just have a bear fund, right? This is bull fund, and they'll have a bear. And it makes a lot of sense. It has nothing to do with being in a bear market. All securities move up in upcycle waves and down in bear. So when you hold them both, I mean, I know people that I didn't end up experimenting with it because I've been so busy with the channel and other things. But buying, if you don't see a outsized move in one direction, for say Tesla, you can own Crash and own Tesla, and unless you see a 30% move in a month, you're going to get paid on both, and they're going to do fairly decent. But when you get an upside move in one, the NAV is going to deteriorate, and one of them much more than the other. But you won't see a lot of NAV reduction in a 3 to 5% move. And yet you're paid on both of them. So that's kind of a fascinating, and that may become an entity that people start to use, and it certainly is a hedge mentality. So let's go over these. So we got YMAG, and what I did here was the percent change in the payout, right? That's what most of you care about. You don't care about what the NAV did. I mean, you care about the NAV, but I can tell you both NAVs are in the 20s. One of them might be 21. I'm not looking at it. So they've held their NAV, and just holding your NAV and paying 40, 50% yields. I mean, in this case, and remember the yield that they quote, and you see it over here, is that month. At the time that they're showing you the declaration, they're taking the underlying price and they're taking the payment, and they're saying if every payment was equal to this, you would have this kind of a yield, right? So that's where they're going with those when you see that type of yield. But I basically just went out and said, what is their yield that they posted, right? So it's going to change. If YMAG goes up 5%, right, then the yield may be lower. But remember that the yield is going to fluctuate month to month. Look at this. It started at 43 cents at a 37.48% gain. 5%, 2.36. That's a nice trend. And we saw Microsoft move up recently on some projections. So that, and when you have and NVIDIA, I keep saying NVIDIA because that's the fund here. Just like I say Tesla sometimes for Tesla. So your YMAG with 7 components, and one does better, or 2 in the case of NVIDIA and of Microsoft, then you're going to see it. And even Apple, right? All of these companies move on news and go up and down. So let's jump over here. So YMAX is all of them. To me, if I want balance, I've got some pharma, I've got digital mining, I've got crypto. They move in and out of different. They got some generalized. They got Robinhood, a retail broker. They got an energy company. They've got Space, AST, Space Mobile, ARM Holdings. You know, there's I'm jumping into ULTI, but knowing that YMAX has a wide variety, just look up the funds, right? There's crypto in there. There's a fair amount of a GigaCloud, a tech company. There's some pharma. So this one, interestingly, dropped, right? But it still has a higher yield because you've got your 80, 90, 100, 117% annualized yields of your Misties, your Nvidias, your Coinbases, your Conies. Those are the 3 top yielding, right? Is Coney, Misty, and Nvidia. So it has frankly some low-end guys. Look at JP Morgan. Look at some of them. You know, they're yielding. But think about just owning JP Morgan. You know, I don't even know if it pays a yield. It probably does as a financial. You know, it's like ExxonMobil. It pays a 3 or 4% dividend if you own the stock. But even in here, in ExxonMobil, you can get 20, 25% annualized yield in YIELDMAX because of their option strategy. So let's jump over. So, and here's my wild child. So 113, right? I had said 109. I think I had 122 or I was 123 last month, because it truly, these are easier to predict, but the prediction factor that changes them is the volume. So you go back here and they announce what they're going to pay, or sorry, you see what all they're collected. Like this has all the underlying funds. This has 7. Well, we know sometime earlier in the month what they paid for all of those funds. So that's their revenue source. If you're YMAX, you collected all those 20 single stock funds. You collected all their dividends. And you have a share count. And generally, they pay out all the money that they collected. And it's just a matter of how many shares they have to distribute it across, right? If you got a cake and you're going to give, 5 people a piece, and it's a big cake, they get a big piece if you're going to give them all the cake. But if you got 15 people crowd into the room and you got to slice it 15 ways, you're going to get a smaller piece. So that's the exact concept that you have in distribution. So there's 3 or 4 trading days, depending on declaration and payout. Right? Sorry, that has nothing to do with it. It's from when they collected the dividends, and we do an estimate based on the volume to what the next 3 or 4 days of volume are. And I got to tell you, it was through the roof. I mean, people were really, these funds are getting more and more popular. There's myself, there's many YouTubers out talking about YIELDMAX, some with real knowledge, some not so. And they get people moving in. There's a lot of skepticism. There's a lot of, oh, it's a scam, or I'm buying growth. They're just return of capital. I've talked about all that, so I'm just going to finish this up. So when you look at this stuff, look at the share count. This came out at 9425, right? When people are doing projections. And there's still 3 more days. Look at what it did on the 10th. It had 13% increase in the volume. I didn't even check the final, but I think this was the final because they announced on the morning of the 13th. Look at that. 19.3% in 3 days of shares. The 10th, the 11th, and the 12th. So naturally, that YMAX is going to have a cut. So they were projecting 87 cents, and it went down to 73 cents. So that's what happens. That's why they change. But eventually, when you get volume in these substantial, even if new people move in, their impact isn't as great. These are 3 and 4 month old funds. But people are sitting out there getting 5% in their favorite big cap stock. And they're going, wait a minute, I can be spread across all of these. And if the market downturns, I'm still going to get paid. I may lose some in my NAV or the cap, but you're going to do that in an underlying that you own. So these are not scam funds, YIELDMAX. They're not return of capital only. These are legit, folks. I'm not saying they have the same risk of owning a stock, or in this case, owning all these underlying stocks is what the risk is. If the market drops 40%, you're going to drop 38.5. You're going to get a little capped with the calls, but of the underlying, they're not going to quite go down the same 100%. But I'm not going to tell you they're only going to go down 50. But you do have a little bit of downside protection in the naked calls they sell. So these are winners, but that's why it varies, okay? ULTI, there is no way. It's not the volume necessarily. Of course that fund changes. Look at this. Here's ULTI, and I'll finish with this. For those that care, those of you who wanted to see it, you've already seen your results. They've been posted earlier this morning. But this gives you a little bit more deep dive of why and what they hold and what the future is. People ask me all the time. There's 2 schools of thought. Most people say ULTI is super dangerous. Others say, oh my God, I'm buying a $15 fund and I'm getting $1 a month. Are you kidding? Okay, it's the wild child. Why is it the wild child? Well, first off, I wanted to do two things. I'm going back on 6/11, right? This is the next day when I did a prediction. They were 1,025,000 shares. Or sorry, 10,025,000 shares. Make sure. Yeah, I don't have my commas in there, so it's easy to. Let me show you what they were then on 10/13. These are the holdings as of 6/14/10. But this is what they closed at on the 13th, whereas the 11th one that I showed you is what they closed at on the 10th. These are always, at the end of the day trading, they put the date of the next business day. So we add 10 million. Now there's 11,725,000. So they went up 15-ish%, 16%. I can just look at it mathematically. Okay, that's a big inflow. That's a big inflow. And part of it's just a discovery overall of YIELDMAX. They're still, they're not a young company in that they're 18 months out there, but they're new to these funds of funds, and they're catching attention. People talk. So let's go over why ULTI is the wild child. Well, first off, I'm not even sure if they do synthetics. I think most of this is just real covered calls. So they buy an underlying security and they write a call. Now, they could be doing it. I haven't researched it 100%. But in general, it's a covered call fund. But they did it where they're constantly selecting companies that have super high IVs. And they're making their money on the covered calls, the weekly covered calls. They're different than the weekly calls in the single stock funds. Those really aren't covered calls. Those are sort of covering and giving a different twist to the synthetic, which is bullish bets on both. They're buy a call, sell a put. Both of those are bullish. And then they come in and sell a call when they don't own the underlying in the single stock funds, and hoping to keep all that premium because it doesn't run past their strike price, their weekly strike price, which is above the current market price. So these are taking a different tact. And you see these are, go look at the charts. Now, some of them, him and hers, obviously it's a retail, him and hers health. That kind of tells you. Robinhood is your broker. It's a Schwab, a Fidelity, a young generation mobile phone trader. Not to say that the other institutions don't have people coming in with their mobile apps. But if you're running Thinkorswim on a mobile, good luck. I'm sure people do it, but it's not my cup of tea. I want a big monitor. So the idea, that's what's happening. And they got MicroStrategy. They used to own Coin, and look, Coin is back in here now. I like that. Where is Coin? Probably looking right at it. But I saw it there it is. And on 6/11, there was no Coin. So they move in and out, but in all honesty, some of these are staples. Carvana's been in for a month. CleanSpark's been in. ARM's been in. This is newer, Space Mobile. GigaCloud's been in for at least several weeks. I don't look at this daily. Typically, I glance, once a week at their holdings. Irish Energy's newer. Mara's been in here for some time. Digital Miner. Mobileye Global is newer. Novavax has been in here for a while. Reddit is somewhat newer. I think most of you know what Reddit is. Sunrun is a big solar. They've been in here. Supermicro's been in here for a while. Supermicro has got some of the highest IV I've ever seen. Now, it may calm down some, but that thing has some. So, they're buying the underlying and they're selling calls, which when they have a lot of premium, You get called out, you buy it again on a down dip and write another call. Zim is newer. That's a big Israeli global shipping company. Vertivive, I don't know them. Upstart, I know that's been in here a while. All right, so my point is they're able to capture higher, and honestly, I think they're dialing it in a little better. In all honesty, they were it's a new. It doesn't fit the profile of YMAX or YMAG. It doesn't fit the profile of the single. So some people love it, some people hate it. It's hard to understand it, except for the fact that they buy the underlying security and they write covered calls and they get super high premiums. I think even the fund managers are figuring out which ones to buy, right? Keep some staples. I mean, MicroStrategy and Coinbase, if you look at Misty and Coney, other than NVIDIA, they're the goats, right? You got three goats, if you ask me, right there. So that's what I got to say, and that's all I have for you folks. So that was your summary. You've all seen this, or those that haven't, but this is behind the scenes detail, trying to make you aware. Okay, Bruce out. Not financial advice, not a financial advisor. Have a good evening. Bye.